As head of investment for Morgan Stanley Investment Management, Navtej Nandra travels the world meeting investors and looking for investment opportunities. He is the first to admit times are uncertain and the scale of the current crisis is massive. Things have been turned upside down. Emerging markets are now stronger than developed ones. It's a sharp contrast to where the world was 5 years ago.
It is global in nature. So unlike the past where you had the Russian debt crisis or you had Asian issues or you had the Latin America problems, this one actually affects the entire globe. So there is no place left in terms of looking for a cushion or hoping that somebody will be able to step in and make a difference to our lives today.
While the problems span the globe, the face of this crisis has been the European Union. Countries throughout Europe have been forced to take tough austerity measures to curb debt and spending in order to preserve their participation in the Eurozone. But emotions are running high, and Nandra thinks this crisis will hinge on politics, not economics.
Frankly, to me, the biggest concern, which is what I keep coming back to, is the social issue around the pensioners and their expectations, and the social issues around the politicians and their desire to stay in their countries. That ultimately will decide all of this. It won't actually be economic theory, because people will behave rationally and irrationally when you're dealing with 15 countries.
Nandra says things are pretty gloomy elsewhere too. In the United States, housing prices are still low and consumption is weak. Industrial production is on target, but industrial capacity is low due to investment, and it's easy to see why.
This has become much, much harder if you're an entrepreneur and an investor, because there are no places you can go to and say, okay, I'm going to invest here and create growth, and that growth is going to be used by who? Americans don't want your growth, they want their own growth. The Eurozone doesn't want anybody else's growth, they just want to survive right now. And the Chinese will say, well, thank you very much, but we have our own industry.
The Chinese economy has slowed too. Commodity price decline suggests weakening Chinese growth. Crude oil imports have dropped almost 16% in August, a 22-month low, and other economic statistics are weakening. Still, Nandra isn't pessimistic about China.
We believe China growth will slow, but that's not unusual. No economy can keep growing at 10-12% every year for 40 years. But their slowdown in growth will still be enviable. They're not going to go slow down to 1 or 2%. They're slowing down to around 7 to 9%.
Nandra was speaking at a talk organized by the Center for Governance, Institutions, and Organizations. The group of NUS professors who were listening wanted to know what kind of investment advice he has for his clients at a time when value is harder to find and growth is slow.
What I am telling my clients right now is to worry a lot more about what are they seeking, what is the time horizon, what is their risk tolerance, and do they have the resources to manage it, or do they need somebody else to manage it for them? Because that actually then decides the solutions that we create for them. If the clients are more self-deterministic, then they are looking for places or products. If they are less self-deterministic, then they need more advice.
For Nandra, these are interesting times. He predicts the Eurozone will stay together and says despite things being dark and stormy, he's optimistic about the world's financial future.
Net, I'm optimistic, because if you look at human history, we are far better off than we were 50 years ago, 100 years ago, and 1,000 years ago. So I see no reason why I would suddenly lose faith in humanity today.
For NUS Business School, I'm Marissa Thomas.